This is Scott Becker with the Becker Private Equity Business Podcast. These are 8 quick business notes this morning. First, the market surged yesterday, just a terrific day in the markets. They're relatively flat today, but again, a great day yesterday. Second, and again, don't bet against Tesla. Tesla jumped 5.3% yesterday, still down 24.5% year to date, but it was down about 33 to 35% year to date. Other EV makers that are truly EV makers are really struggling. Tesla too, some, but don't bet against Elon Musk and Tesla if you see that rebound. Third, Apple rose another 2% yesterday and now is at 3.32 trillion in market cap, i.e., it's back to number one ahead of Microsoft and Nvidia. It's like the little train that could just keeps on popping along and getting bigger in terms of popularity and strength and amazing in terms of market cap. Fourth, Palantir Technologies jumped 6% yesterday, and now it's up 46% year to date. It's a fascinating company founded by Peter Thiel, who's one of the original Elon Musk colleagues and really a fascinating person. Fifth, a very brief private equity note. Big heavyweight sort of leaders in finance, the CEO of JP Morgan Chase, Jamie Dimon, versus the CEOs of Apollo Capital, Mark Rowan, and Jonathan Gray of Blackstone. You got this fascinating situation where Jamie Dimon saying that private credit creates plenty of additional systematic risk to the economy. It's an industry that's grown from $40 billion to $2 trillion nearly over the last 20 years, whereas Apollo and Blackstone, who are two of the biggest, leaders in private credit, say no, it actually reduces risk by more closely matching maturity dates to essentially what loan dates are. And so different perspectives on it. And also private credit's been sort of really on fire recently and, better returns last year than private equity. So a lot of people watch this private credit, and what it means for banks and so forth. Six, DraftKings jumped nearly 8% yesterday. I'm probably the worst bettor in the history of the world, so I wouldn't really talk about DraftKings, but I am taking some money from some of my friends on the golf course this year, so I'm enjoying that tremendously. Seventh, Walgreens keeps struggling and is down 42% year to date. It's a tough business in the retail pharmacy world. Eighth, another story along those lines, CVS Health down 22% year to date. Again, fascinating to watch that. It's a little bit more measured than Walgreens Boots Alliance because it's got the huge payer business in Aetna, but again, down 20% year to date or so, 22% year to date. Walgreens down 42% year to date. Again, those are 8 of the stories we found today at Becker Private Equity and Business. We'll be back with you tomorrow with more on the private equity side on Wednesday. Thank you for listening to the Becker Private Equity and Business Podcast.